This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or any other advice. It is not intended to cause or induce breach of any existing agency agreement. Welcome back. Another episode of the Full Subjects podcast, coming to you virtually this time, recording with a new program, Riverside, which has been great so far. We've been using that for the last little bit. A lot better quality if we do need to, record virtually. So shout out to Riverside. Thank you guys so much for having this platform that we get to do this. Cole, how are you?
Yeah, we're accepting sponsorships, so shamelessly accepting sponsorships. No, in all seriousness, no, things are good. It's been a good week. Went to a conference this week for mortgage brokering, which was nice. Learned a lot there. I think you were at a conference this week too, no?
Yeah, we had our yearly office conference, which was really awesome. The topic this year was all about leverage. So just basically, getting more out of your time and how to be more efficient, which is great. I learned a ton. How about you? It was just all things mortgages, or was it more business entrepreneur related?
No, it was all things mortgages. So it was what they called an agents university.
Mm-hmm.
So we learned a lot of different things. We did some things that we learned more about, like an economic update, kind of what's going on, what to expect next year. I mean, one of the big things that they really highlighted was utilizing your database. I mean, I know you can definitely attest to that as well. So from I guess that side of things, having a strong database and utilizing that database is a really effective tool in order to grow your business as well as retain your business. So yeah, no, it was really informative. I enjoy that kind of stuff. It's good to hear from different people in the industry, excuse me. And also just to talk to other people in the industry and kind of see how things are going. And as you start to do more of these things, you start to see more people and start to kind of build relationships with those people. So it's nice. I mean, at the end of the day, we are technically all competitors, but we're all trying to work for the same reason, and that's to help the client. So yeah, it was really really informative, and I really enjoyed it.
Awesome. That's fantastic to hear. We're catching up this week with our kind of monthly stats episode. We're into November now, so running out of runway with the year. Only about, I guess it would be 50 days left in the year, which is wild to say out loud when we're recording this. Here we are. Yeah, cool. How does that make you feel?
I don't even know how to comprehend that, to be honest. I mean, obviously my wife and I have a son now, and I think time goes by. It feels like it goes by quicker now that there's another person that we're responsible for. And I know, Austin, you can probably attest to that. You've been doing this a little bit longer than I have. But yeah, it's hard to really fathom how quickly time's gone. And I know that in an instant, it'll be December, and then it'll be Christmas, and then we'll be in the new year. So just trying to take every day as it comes and enjoy the process.
Yeah, for sure. And before we get into the stats episode, the real question is, now that we're into November, are you going to be joining me on our Movember journey? Because we had a page last year. Will you be trimming it down to a stash? I know we're a couple days behind, but you got some facial hair.
Yeah, we're a week behind. I don't think I can right now because we're supposed to be doing a Christmas photo shoot soon, and I think my wife might have my neck if I do that. So I think I'm gonna have to hold off for now. Maybe I'll take later part of the month, but I think it's in my best interest right now that I don't do that. So.
See, it's so funny because I just booked my Christmas family photos, and this thing's definitely going to be there.
I'm sure everyone will be thrilled.
Yeah, all my business Christmas cards this year will have me with this thing on my face. So yeah. Anyway, on that note, let's talk some real estate stats.
Yeah, for sure. We like to always kind of give a quick update. We've talked about the Bank of Canada quite a bit. Obviously, we've had an episode since the last announcement. So yeah, I mean, now what we want to know, okay, what's going to happen at the end of the year? Because we still do have one more announcement, and where are things likely going to go into next year? And then, of course, we'll talk about stats for last month. It's actually, I think I'm looking forward to stats this month because we've had a little bit of a change. We've been pretty... I don't know. Things have been kind of boring, and I hate to use that word, but things have been very, very much so the same. We've finally seen a little bit of change, so stay tuned for that. But yeah, so market update, fixed rates. We did see a bit of an increase this week. Not every lender did, but a majority of them did. That was in response to the U.S. federal election. The market did really well, and bond yields went up. They've actually since corrected. They kind of spiked a little bit for a day or two, and then they kind of came back to where they were before. But we did see some adjustments on fixed rates, very minor adjustments, but still worth noting. Today we got the unemployment, I guess the jobs report is a better way to put it for Canada. So unemployment was exactly the same as last month. Last month. I can't talk right now, which is not a bad thing. But one thing that's worth noting is we created a lot less jobs last month than we did previously, like quite significantly less, which it's not necessarily a good thing or a bad thing. It just might mean we might see another larger rate cut next month. There's a few big things that are going to happen before that rate cut. We're going to get inflation data for November, which is important. We're also going to get non-inflation data. We're going to get employment data for November as well. So that'll definitely factor into it. The way I understand it right now, it's more or less a coin flip if we're going to see a quarter point or a half point. It's essentially guaranteed we will see another rate cut. So yeah. And last thing I want to note here is the U.S. actually, they cut their overnight rate yesterday. That was the second time they've done that, and that was another quarter point. Some people, I was reading some articles about it, and some people are like, oh, it's kind of an awkward situation, just given that we've had a federal election and there's kind of some uncertainty about what's going to happen. But yeah, worth noting. That doesn't mean anything in terms of Canada's going to cut rates at the same rate as the U.S. or vice versa, but still is worth noting. What's your guess? Quarter, half point as of right now?
So for what I've seen, basically, is it's like 50-50. So 50% chance that it's 25, 50% chance that it's 50 basis points. I think that it will be... I think it'll be 25. I wanted to say 50 there, but I think it'll be smaller. Would I be surprised if I'm wrong? No. Like I said, it's 50-50. I think it'll be a smaller one, though. As much as I would like to see it potentially be a larger one, I think that, dropping rates basically, a full point within, I guess it would be like 12 weeks. I feel like that would be a lot. Doesn't mean it's not possible. They raised them kind of at that rate on the way up. So that's kind of what I'm thinking. What's your take?
So I'll answer the question. Let me just provide a little bit more information first. So
well, you got more info and you're making me answer before.
No, not at all.
I'm just giving you a hard time.
It's not gonna. I don't think it'll change your answer. I just want to provide this information first. So the information I wanted to provide is most economists are expecting we'll see a 2.5% overnight rate by either April or June of next year. And let me just kind of provide how that would look. So right now we're at 3.75, meaning we'd have to go down another 1.25. We have the December rate announcement, and then we've got January, March, April, June. So if they did it in April, we'd need to see rates drop 1.25 by over 4 announcements. If they did it in June, we'd need to see it over 5. So the way I see it is if it's in June, we'll likely see 5 quarter-point drops. If it's in April, it'll be because we saw a half-point drop now, and then we'll see 3 quarter-point drops. That's my guess. I honestly think if I was going to bet right now, I'm actually going to bet on a half-point drop. I think they're going to be a little bit more aggressive in December. But it's hard to know. Like I said, the big things are let's see where inflation's at, and let's see where jobs, like unemployment rate, and are we creating jobs? Let's see where that information comes in the next month. But I honestly wouldn't be surprised if we see another half, to be honest. And then I think it'll probably be a pretty steady quarter-point drop. Once we hit that 2.5% mark that I was talking about, I think then you'll start to see a little less activity, not activity in the market, but less activity with rates. And then we'll see. There can still be some ups and downs after that, but I think we'll get to that 2.5 mark, and then we'll kind of probably stay there for a little bit. But yeah, we'll see. So yeah, I'm gonna do the opposite of you. I'm gonna say it's a half. I'll ask you again, obviously, before the announcement. We can update our beliefs. But,
and then you'll remind me that I'm wrong if a half point happens. Love this podcast.
No.
Holding us accountable.
I'll give you an opportunity to change your mind prior to, like, we'll revisit this because we'll have another stats episode before the next announcement because it's December 11th. So we'll do another stats episode before then, and we can come back in. We'll get Cody's input too, and we'll figure out, okay, what is everybody feeling at that time? But yeah, I mean, that's pretty much it. I think for the next little bit, you'll keep seeing variable rates drop, fixed rates. You'll see some ups and downs. I don't think you're going to see massive change in the short term. I think it's going to be interesting to see what happens once the presidency changes and we start to see kind of what adjustments happen in the economy. But typically those things don't happen rapidly. So it'll be interesting to see what happens. But yeah, you want to jump into stats?
Let's jump into stats. Let's do it.
Okay, so as I mentioned, I'm actually a little bit more excited this month. Not to say I'm not usually excited, but there's some different things that have happened this month, and I know Austin can say that he's felt some of the same success that I think other people are seeing. So we'll get to that in a second, but let's talk about listings first. So new listings dropped, which you're like, okay, is that a good thing? Is that a bad thing? They dropped 5% in October, but still year over year they're up about 25%. So does that mean anything to you? Right.
Not really. Like it feels like there was a bit of a bump after a very very slow slog of September. October definitely feels like more people kind of got off the sidelines.
Okay, yeah, I think that's fair. And then active listings as well, they were down about 3%, which you would think, okay, if active listings are down, maybe things are selling, right? That would be that would kind of make sense. And to be honest, they were. So let's talk about that. Transactions up to about 1,300 in the Fraser Valley in October, which is a 35% increase over September, and almost the same increase over last October. So that's great because I think we were less than 1,000 last month, if I'm not mistaken. So that's awesome. Like that's a great sign, I think. So my question is, do you see that momentum continuing into November? Where do you see us going into December? Because we've talked about before, December often can be a little bit of a slower month just because we're getting a holiday season. So yeah, I'm curious, what do you think is going to happen this month and maybe going forward?
I think it'll still kind of be at the same pace. I kind of feel like what's going on right now, the big spike in listings in September, I think that's pretty common. A lot of people holding off in August, last couple of weeks of August, waiting until September, that kind of checks out to me. And then, yeah, October being a little bit smaller, some of that inventory starts to get eaten up. So yeah, that makes sense. As far as what happens until the end of the year, I think you're going to see more and more people getting off the sidelines of, okay, maybe I do want to do something this fall or early in the next new year. So that kind of makes, like, I feel like it'll still be steady. And then again, we'll have another interest rate announcement in December, and then we'll kind of be into our spring market in January, February.
Okay. Yeah, I think that makes sense to me too. I'm hoping we're going to start to see some more sales activity. I mean, I think that's good for everybody, quite frankly. So yeah, I'm hoping we'll see that. We did, like I said, we saw a big increase in sales. So the sales to active listings ratio actually went back up to 15%, up from 11%, which puts us back into kind of that balanced market, which I think I don't think that is unreasonable. I think that makes a lot of sense. I think we're going to see some ups and downs with sales to active listings ratio month over month, and that's just because things are going to vary month over month. We've talked about in the past where sometimes the sales don't record in the same month that they happen. And what I mean by that is just because you sold 3 places in October doesn't mean they're going to close in October. So sometimes closings just kind of happen like that. I am curious about one thing, actually, speaking of that. So there's been some mortgage changes, like different policy changes. I think we've talked about this before. And
you're talking about the ratios up to past $1 million and some of the other stuff.
Yeah, and a lot of those go into effect December 15th. So have you dealt with any purchases, sales that have been impacted by that, where somebody's like, hey, I really want to push out past that date so that I can take advantage of that? And if not, I'm curious if we're going to see some more closing dates kind of push past that date because of those changes.
I personally haven't had anything adjusted because of that. Yeah, I haven't had anybody push. I personally haven't had a lot of people, shopping in that just above $1 million
right
price point at this time. I've had most of my buyers and stuff are kind of a different inventory. What I find a lot of times with these changes is that they need to become in effect until people start utilizing them. Like you hear the news of it, and then you got to wait until it can actually be done.
Mm-hmm.
And then, that's when I find people jump at it more personally. But I'm sure there have been some people that have been adjusting or massaging dates, seeing what they can do just to, either stretch out that payment or kind of utilize some of that stuff.
Yeah, no, I think so too. Especially like you said, some of those 30-year options by stretching out that payment is can be helpful for people, especially non first time home buyers buying new places because now they can utilize 30-year AMs even after that date. So yeah, I'm curious to see what will happen with that. But yeah, so let's talk about pricing because typically when you see more sales, you would think, okay, pricing might adjust. I mean, in a small time horizon like a month, you may not see immediate impacts, but no, pricing is actually pretty much down across the board, which I don't think is unreasonable. Most of the percentage decreases are less than 1%. So overall, we're 0.7. Attached is the largest month over month decrease at almost 1%. Townhomes down 0.3, apartments also down 0.3. Yeah, I don't know. I don't think that's surprising. I think we talked about it last time we did this episode that there's going to probably be a little bit of a bumpy kind of graph when it comes to pricing. You're going to probably see a little bit up and down month over month, but I think things will remain fairly steady. Over time, we'll probably start to see a slow upward trend again, but it's not looking like we're going to see a dramatic uptick on prices, at least in the short term. I think something pretty considerable would have to happen before we see that. Yeah, I don't know. What do you think? Does that make sense to you? Are you surprised by that?
Yeah. So when I'm looking at some of the, you talked about the percentage changes. I wonder, or sorry, you're looking at the percentage changes. I'm also looking at the the difference between the different asset classes as well as just what's moving right now and what are people's plans typically in this market. So detached is down, like you said, an almost full percent. Townhomes and apartments are down less. I think a lot of people that are moving right now in this market are either getting into the market or upsizing in the market because this is like the perfect time to do that. Doesn't necessarily mean that if you're downsizing right now or unloading something, it's a bad time. But yeah. So when I see that, to me, it kind of seems like people are taking what they can get for their prices, knowing that they'll be able to also sharpen the pencil on the other end. And especially like townhomes kind of feel like a really hot product right now, especially in like the Willoughby, Clayton, Cloverdale area. I've heard, even people in my office going into multiples, fighting over them, all that kind of stuff. And again, if those people are planning to jump into that detached property as an example, knowing that you can save 1% while you're maybe missing out on 0.3% on your townhome. Like that's when you're looking at what you're going to, that's a lot larger adjustment.
Well, yeah, for sure. I mean, if you run the numbers on that, even just the strict difference, you're saving more than half a percentage point, and then obviously the price is going to mean more of a savings, right? So, yeah, that's a great analogy. So those townhomes that you're talking about, where you're seeing a little bit more activity on, do you think, or maybe you know the answer, is it people getting into the market more so? Is it people upsizing? Where do you think most of those people fall?
I think there's a lot of upsizers, people that are finally, getting a bite on their condo and then wanting to get to that. And yeah, there is some people that are, getting in, and that's the first product that they're going to based off of their situation, which is awesome too. But yeah, it just feels like the stratified properties are in like a healthy price point where people feel comfortable and confident to make a move into. Typically, when you look at the stats and stuff as well, the larger price stuff can be the most volatile. Like that's where you see the biggest changes in prices and HPI price. Townhomes and condos, because they are smaller and more consistent. It seems a lot tighter with the adjustments. So I think people moving into those feel confident with that to make a move to and from.
That makes sense. So last one we like to look at are days on market. Not big changes here. Detached, I think, was the same. It's about 5 weeks on average. Townhomes, a little bit less, so 4.5 weeks. And then apartments, I think, dropped a little bit more to about 4 weeks, a little over 4 weeks. That none of those things really mean a lot. And what I mean by that is their averages. It's really going to depend on how well you're marketed. We've talked about that quite a bit. And Are you a unique product? Like if you're a product that somebody really highly desires and you're the only one, pretty good chance that you're going to see more activity on it. Those stats don't mean, like I said, I don't mean a lot. I think what's worth noting is you will see those averages kind of go up and down depending on how active the market is. So it doesn't surprise me that those numbers went down. We saw more sales, so you're expecting those numbers to go down. But yeah, I mean that's it for stats. I think I don't know, what do you take from this? I guess that's my big question. What's your biggest takeaway from this?
I think that there's, with some of the adjustments, I think there's definitely more people getting off the sidelines, maybe a little bit more optimism in the market. People know that, I was having a conversation with another agent who had an offer on one of our places and we were talking about dates and stuff. And she said, yeah, like the longer we wait, my guy's payment's going to be going down. So, if we need to adjust dates, I think he's going to be cool with it, things like that. So yeah, I think there's definitely a little bit more optimism for people getting into the market. I think that people feel more confident, and I guess this is more of a you thing to say, but I think people feel more confident even in taking a variable rate, knowing that there'll be some, relief off the pressure cooker of your monthly payment in the future. So it's probably, if you are taking a variable, there's a better chance that the rate that you're taking at the get-go will be your highest payments, and that could be changing every 1, 2, 3 months. So if you could, if you feel comfortable taking that variable rate of whatever that payment's going to be, knowing that in 3-4 months you'll be saving quite a bit of money off of what you're saving money off of what even your fixed rate would be. So I think and again, I'm not guaranteeing that, but just people feel more confident taking a variable at this point, it feels like, and just more optimism of getting into the market.
Yeah, no, you're absolutely right. And I mean, so we talked about at the beginning of this episode that we're expecting to see at least another 1.25 point drop on variable sides. Depending on the type of mortgage, depending on a few different factors right now, you're probably sitting kind of in the 5 to 5.5 range on a variable right now. But if we drop another 1.25, now you're sitting in the less than 4 to like 4.5 range. You know what I mean? Like that's pretty good. Like that's quite good actually. In most cases you're not going to find a fixed rate better than that. Again, it depends on the type of mortgage, the purchase price. Like there's a lot of factors in that, but it's more than likely that you're going to do better on a variable rate mortgage right now than you are on a fixed, especially in the short term. It's harder to project past like the next couple of years, but there's a very good chance. And one thing I always like to note is you can almost always convert a variable rate to a fixed rate without paying any penalty for that. So if rates start to go up again, or if you're like, you know what, variables are not for me, you can convert to a fixed rate, and there's a good chance, or there isn't a good chance, there is the possibility to do that. So it's great. It gives you the most flexibility, and it's always nice to take an option when the rates are going down. Because you can make that payment now and the rates go down, you're either going to save money or you're going to pay off your mortgage faster. So 2 really positive things. Anything else you want to add before we wrap it up?
No, I think that's perfect. Thanks guys for joining us for another episode. As we come to the end of the year here, we've been having conversations and discussions about how we want to do things for season 2 better. So we've got some cool ideas that we can't wait to share with you guys, just to do more and give more information, give more value to you guys. As always, please leave us a 5-star review. We appreciate it. If you've got something you want to chat with us about, feel free to reach out. If you want to be a guest, we'd love to share you guys with our audience as well. And thanks again, and we'll see you next week.